gentlemen, and welcome to another morning trading show, morning briefing show. This morning we have February. It's Tuesday, the 9th of February, and it's nice to meet you again this wonderful morning. It's damn it cold in Germany, and we have a lot of snow in some areas, most in the north areas of Germany. And here in my south area, it's really cold. And yeah, winter is coming. No, winter is not coming. Winter is still here, and we have to handle this situation. And I'm really happy that you spend your lifetime this morning with me. And I want to send you greetings wherever you are in Germany, in around the world this morning. And I can see in the chat, Sandra, good morning. Greetings to Perth, and of course, Michael, and on YouTube as well. So feel free this morning to give me your questions here on YouTube or on Zoom as well. Feel free to ask whatever is in your mind. I hope you had a great night, or in Australia it's a little bit later already. And Vladimir, good morning. And I hope you had a great stay into this new trading day, because we have to keep strong and we have to focus on the rules. So Michael, good morning, and feel free if you have any questions, and my wonderful host will support me in the back. Okay, let's jump into the slides this morning. And I want to share my screen here. Oh, here we go. That's great. So I want to see your chat. Here we go. There's the chat. Simonas, good morning. So, and today we have a special question again. So here we go. Now it works. Okay, as you can see, we have to start, of course, with the risk note. Everybody is responsible for its own trading. Trading with financial instruments of the abnormal markets carries a high level of risk, which is not suitable for all investors due to their complex nature. Consult a specialist if necessary to ensure you understand the risks involved in trading. So we want to talk about some trading ideas. But I will never give you an advice, because you're responsible for your own trading. So, but feel free. And by the way, please be aware that I'm a German guy. You know, my English is colored in German a little bit. So but I do all my best that you can understand what I try to explain. So let's see and start with the news this morning. And the big news are the first one: House COVID-19 relief bill offers checkered same income levels. But this is most important point, the US stocks close at record high. So let's have a look at the market. So you can see we have absolutely highs, top highs in the record highs in, what is this, Dow Jones, 31,406 points. Even in the German one, we have a high 14,168 points. We were yesterday in the futures, but here in this one we have 14,195. I need glasses, damn it, I guess. Jesus Christ, I've got to be old. Okay, so, and the NASDAQ, you see, is still new record highs. So never fight against the trend, guys. And this is really important. Stick to rules. That's the only point. And the topics for today, let's see the market, the news, of course, then see, we don't have running trades actually, because we stopped out in two things with profit, of course. And then I have a question for you today. And of course, we want to talk, I promised you that we start with the first step into the knowledge about probabilities. Why we need to talk about probabilities, I want to explain you, because this is one of the most important topics in trading ever. Okay, but first of all, let's go to the news. So that was a record highs. And of course, Fed's master says central bank support will remain in place a long time. So which means they will flood the market with money more than ever before, and which means we have a lot of space to go in the markets. I know we are maybe in an acceleration phase, the markets, but the market doesn't care about that. The money is there. We have less other things where we can invest money. So we have to invest in the shares or in the markets. And this is why I say, please never fight against the trend. This is the most stupid thing you can ever do in trading. So another one is this one. The minimum wage would cut jobs. Mr. Biden want to have $15 minimum wage, but this would cut jobs. But on the other side, it should reduce poverty. So what's the big decision? I don't know. I don't want to be a politician. I'm happy that I can be a trader. So I don't need this kind of responsibility to make such decisions. It's hard enough to remain as a trader and to become a successful trader. So that's the normal topics. So what we expect today in numbers. So we have, this is today. We expect the most important thing is the Red Book Retail Sales Index this afternoon, 3:55, 2:55 German time, of course. And we have the API Weekly Statistical Bulletin this afternoon or this night today. So we have some, not really. So where we go, where is this foreign trade? That's the numbers that came out already. The previous one was 2.2, the forecast was minus 0.5, and actually number is 0.1. It's a little bit better than expected. And of course, the Red Book will have an effect to all currencies where the dollar is involved. So that's the news that's coming out. It's not really important for us as traders in 4-hourly chart, which means we can focus on our trades and trading ideas. And of course, what we have to learn today. If you have a real account, of course, on Admiral Markets, that you can have this premium analytics. And if you don't have one, then you can use this admiralmarkets.com. And you can find here the analytics. That's the premium analytics. And if not, then you can use the Forex calendar. You can use this one here. But I would suppose, and I would recommend that you open a real account. Why? Because then you can be a part of our wonderful trading spotlight community. And as you can see, we rose to 243 right now. Yeah, we're going to be bigger and bigger in this wonderful, lovely community. And as you can see here, we have a wonderful chat box. I get in touch with Mike, for example. I answer this question. Also, we have from Jens, you can see his open breakout rules, and of course, Paul as well. And I publish my trades as well, so you can see what I'm doing in trading, so you can follow every trade with your own risk management, with your own responsibility, of course. So let's see, that's the only requirement. It's a real account of Open Markets. So open a real account and then put some deposit on it, and then you can have an access to this wonderful trading spotlight community. And you can see in the chat on YouTube and of course in Zoom, my lovely host posted already the link. Okay, so let's go. And let's see, we had trades open, and yeah, you will see, yes, we are a little bit in loss. So, okay, I want to show, that's the hard thing, you know, if you are in profit, that's easy. You can make money, you can make marketing, you can say, oh, be a biggest trader ever. But it's the hard thing for me. It's a really hard thing. That's a big challenge to explain why I'm in loss. Yeah, of course. We start with 10,000 euros. It's a real account, you know. You don't believe? Look at above. You see, at Market, it's a live account. So we put 10,000 euros on it, and now you can see I'm in loss. So do you think I'm a bad trader? Yeah, maybe it's your decision. You can think about that. But I want to explain you why we have probabilities, guys. We don't have guarantees. And as you follow all my trades, you can see I always stuck to my rules, always. And okay, we started 3 weeks ago. That's the third week we make trading right now. We start 1 hourly chart and now we are on 4 hourly chart to keep it more stable. And we need time. So if you want to see what I'm doing in the long run, then you can see this is my live account. And I traded this for 4 years right now. And you see every year, not week, not month, every year I ended in profit. And even this year, I started with a bad January month, but I'm still in profit. And this is the most important thing. So keep strong, guys. Trust the rules. Trust the rules. We have to work with probabilities. Okay, so good morning. Please explain what a balance candle is and how we get the point on the left that you have. Okay, Tomislav, first of all, if this is a special indicator's market profile, I will please you send me an email on or go to my homepage, Know-how-Trading, or send an email to Edmund Markets. Then I can give you the link because it's not priceless. It's not a part of MetaTrader. You can find it there. So send me an email, then I give you the link to this not priceless, of course, indicator, but it's not that expensive what you think. Everybody can afford this indicator. So what is a balance candle? Here comes the question. And the balance candle is that what it's the real meaning. It's a balance between supply and demand. So, and a balance candle is really clear. So look at this one. This is a balance candle. And it's really clear. You have a body, a small body, as small as possible, like a doji. It's a small body. We have wicks on the upper and the lower side. They must equally, the upper and the lower shadow, and they must as double as the body. Then it is a real balance candle. So maybe this is 1, 2, because the body is a little bit big, and you see the upper wick is not as long as the lower. So it's not a real one. So what is a balance candle? This is a balance candle. For example, you see a small body, the wicks are equally on the upper and the lower side, and they are as double as the body. So this is a real balance candle, and this is what the meaning. This balance candle occurs at the end of a move or the end of a correction, and it's the real meaning. It's the end of the move. We have a balance or the changing of the volume between buyers and sellers. And this is what we're looking for, that we can see the accumulation phase in the correction. And this is the signal that we can open a trade in direction of the trend. Never work with limit or market. This is completely stupid. Always work with stop sell or stop buy order. Okay, that was for Tomislav on YouTube, of course. So you see, we were online, we were long in Swiss franc Japanese yen. We had a good trade. We stuck to the rules. That was the most important thing. So you can see here we had the balance candle, and then the price went up. And that's what I say. As long as we don't reach the first target, I work with a soft stop and I trail my mental stop bar by bar. And this is really easy if you work in 4-hourly charts, so maybe in daily chart. That's really simple. And if you have a close above, and this is, look, that was my behavior. So that was the black candle. Afterwards, that was the balance candle, and it looks like it is. So that's the end of this move. We had a lot of space to go. The trend is still valid. So, but I trailed my mental stop above, and then I could see, this second red candle had a close below my black candle. Therefore, I trailed my hard stop below the wick, and there I got out. And you see, I made 8 pips. Okay, it's not that much, but it's a profit. And I stuck to my trade management. First of all, you need the rules, and then you had to follow your plan. So what we have to do right now, I have to wait. So rule number one, trend is still valid. It's a young trend, of course. I had a correction round about 86%. So all the first three rules still fit. Now I have to wait for the fourth rule, and it's a balance candle. I have to wait. As long as my first three rules still fit, I have to wait for the fourth and I have to do it again. So wait for it. The trend is still young. Wait for it, and it's still on my watch list. The second one was Euro Japanese yen. And here you see I did the same. So we had a trend there. We had there the balance candle. There was a balance candle, and I had a stop buy. I went in the trend. I was close to my first target, but not exactly. And I never intervene into my trade, or very seldom. So therefore, there was the red one, and this was, you see the red line. Make it a little bit bigger. The red line. Yeah, come on. So that was the last black candle. That was the red line was my mental stop I have in my mind. Then I could see the red one had a close below the black one. Therefore, I trailed my stop, my real stop, the hard stop into profit below the red candle, the wick of the red candle, and there I got out. So you see, actually, we have a trend continuation candle to the lower side. So there's a lot of pressure in it, but it's still on my watch list. So you see the trend is still valid. We have a young trend. We had the correction, and now I'm waiting for the fourth one. I wait for the next balance candle. We made 21 pips profit. It's fine. So we have to wait. Believe me, in 4-hourly chart, we will make our profits. This is it's not a guarantee, but I promise to do everything. And what I can do, stick to the rules. So what's still on my watch list? I want to show you this one. You see why I control my losses for the three, and you see the price is going down more and more and more. It's not the time for having hope or something else, or crossing fingers or something else. That's stupid. Cut the loss if the price don't want to go into your direction. It's easy. Cut the loss and let the winners run. It's simple. It's not easy because it's the human part. Here the same, Euro, Australian dollar. Look at this one. We had a small loss, and now look the price. Now imagine you had your stop below the last 0.3. That would be a big, big loss. It could destroy your account. Why you should do that? It's completely stupid. Cut the loss, and that's easy if you work with Heikin-Ashi candles. It's not a rocket science. You have a trade, you have a balance candle and a trend continuation, and you have the changing of the color. And if you can see the color changes, cut the loss. It's nice. It's beautiful. It's not that the trade it will destroy your accounts. Follow the rules. That's everything. So US dollar, Canadian dollar, the same. Look, we cut the loss, and now the price is going deeper and deeper and deeper. Why you should extend your loss? Where is the sense of it? The stop loss should protect the trading idea. And is your trading idea not longer valid? Cut the loss, and then we'll look for the next signal. That's all, guys. So for today, there are no trading ideas. So on my watch list is still Euro USD. We have a downtrend, and I want to go short, but we have to wait for our next balance candle. Euro British pound, we are waiting for the next trend. Euro Swiss franc, still on my watch list. Now look at this one. That's amazing. That's one of the, maybe this is on my watch list today. So we got closest below 38%, and now we're waiting for a balance candle. And if this balance candle will occur today, then I open the trade. I will publish it on Trader's Yacht, of course. So that's maybe a short idea in British pound, Canadian dollar, and New Zealand. Yeah, there was yesterday a signal, but it's not a really clear trend. It's not really a clear trend. So still on the watch list today, very close, Euro Swiss franc and still Euro Japanese yen and Swiss franc Japanese yen. Wait for the balance candle. How do you decide where your stop buy is after the balance candle? Just above or below. Give a little bit space, not exactly. Give a little bit space. We don't need to catch every pip. It's not necessary for experienced traders. We are in 4-hourly charts. Give a little bit space. So for example, maybe there was a balance candle. So here we go. And if there were my balance candle, I would say I open the trade there, roundabout, not exactly above or below the balance candle. Give a little bit space, maybe 10 pips or something else. With your eyes, be clear, be realistic, without any emotions. So that's I do it that way. Do you use divergences? That's crucial for trading. So do you think it's crucial for trading? It's your perception. Yeah, sometimes I use divergences, even if I'm with the price in a very extreme position in the lower or the upper green zone. And this is a special approach. It's called movement trading. I want to introduce you in a later session. It's a second setup along or beside trend trading. And then I use, of course, divergences, but it's not the 100% setup. But sometimes I use it, yes. Okay, so the question of today, I want to ask you before I go to my topic for today, and my host will give you the question. How long have you been in trading today? How long have you been in trading already? So more than 3 years, less than 3 years, or don't you trade in life? So maybe you can give me this answer if you can see the survey where on Zoom. Here we go. So there is the question. How long have you been trading live? I want to ask you that I can see how experienced you are. So 3 years or less than 3 years, or I don't trade live right now. If you are engaged on Zoom, then you can click the survey on. Of course, in YouTube, you can give me the answer. If you text it, how long have you been trading live? 3 years or more than 3 years, less than 3 years, or I don't trade live right now. Alex, greetings to Toronto. Thank you for sharing your lifetime with me. About 8 months. Okay, so here we go. Yeah, less than 1 year. So I guess we are at more beginners here, and this is why I want to talk about this very interesting and crucial topic today. And on YouTube can still give me the answer. So we can close the survey here, and we have 50% less than 3 years. So we have a lot of beginners here. That's great, guys. And I love it, because why I love beginners, we can start from the beginning like a white paper. I don't have to fix too many believing tenets in your mind. This is really, really interesting. Simas, wonderful. Okay, so let's see. Maybe you remember, guys, yesterday I asked you can you influence the market? And we figured out we cannot influence the market. Never. If you are the boss, yes, you can. If you are the boss, you can influence the price and you can influence whatever it is. But in trading, we are one among the crowd. We cannot influence the market. So, and as a consequence, we miss the guarantee part. If you cannot influence the market, you don't have a guarantee, which means if you have a trade, you can do nothing to push your trade into the profit. Yeah, you can pray, you can cry, you can getting crazy, whatever, but you can do nothing, literally nothing, to push your trade into the profit. So if we miss this kind of guarantee, yeah, we have to work with the probability. If you miss the guarantee, That's good. It's a good sentence for on Twitter, Anna. If you miss the guarantee, you have to work with the probability. Oh, I love this sentence. I have good seats this morning for that. Okay, if you miss the guarantee in trading, you have to work with the probability. So what is the real meaning of probability? And this is the topic for today. What is the real meaning of the word probability? Did we ever thought about that? And this is why I teach all my clients in my private coachings. Step beyond the scenes. Step beyond. We always used to see the actions. But you know, there's a karmic principle. We work with cause and reaction. So what is the cause? And we need to stop thinking about the effects. We have to think about the real cause. Therefore, we step into the meaning of something. So what's the meaning of probability? So in the dictionary, you find the real meaning, and it calls degree. Listen to the word, degree of possibility of occurrence or predictability of an event. Oh, now you see, oh, there are a lot of thoughts in it. So we have a special degree. It's not a guarantee. It's a kind of possibility. It's not a guarantee. And this opens a huge new horizon if you work with a possibility. And it's a special degree. Or a question, can you predict when the 4 rules will occur next week in every kind of underlying? Can you predict it exactly? Do you know it when the 4 rules will occur next week in Dow Jones or in Euro? Can you predict it? No, you cannot. So it's a special degree of possibility or predictability. It's a kind, when it occurs, it's a special degree. You can never know. It's a kind of possibility. And here we go. The last word of an event. So, and tomorrow we talk about the event, because what is the event? And I know a lot of traders, they say you can be successful in trading if you roll the dice often enough. Yeah, maybe this is true. But here comes the question. Here comes the question. We are talking about of an event. And now take this question in your mind, remain it and keep it in your mind, and think about the rest of the day, about this event. What is the event we are looking for in trading? What's the dice? What's the dice in trading? And maybe you can give me tomorrow the answer. Take it with you today and think about it. Think about the word probability. Think it through. It's a degree. It's a possibility of occurrence of this event. So what is the event in trading? What's the event in trading? Because without the dice, you can roll nothing. So without an event, you don't have a degree of possibility. So what's the degree? What's the possibility? What's the event? And this is the real meaning of probability. Repeat it. If you miss the guarantee, you have to work with probability. So that's the real meaning. Maybe you can learn it with your mind, degree of possibility of occurrence or predictability of an event. So what's the event? And we're going to talk tomorrow about this event, because this is really, really important, guys. So I want to say thank you for a lifetime, and I jump into my next webinar, and I hope you will have a great day and a lot of fun. And as always, think about the wise words of Jedi Master Yoda when he said, may the force of the rules be with you. See you. Bye-bye.